The stock market just finished a losing week. The S&P 500 fell 1.4%. The Nasdaq fell 2%. Friday itself was green, and the Dow added 518 points, but the week still ended red. And here is the strange part. The best thing you could have owned this week was not a stock. Bitcoin just had its strongest week in almost 2 years, up more than 20%. Gold had its best week in months. Both moved on the same piece of news. Not earnings, not the Fed, but an announcement about government debt. Here is what happened, and the 3 levels that decide what comes next. The Treasury said it is doubling the size of its bond buybacks. A buyback is what it sounds like. The government goes into the market and purchases back its own bonds that are already out there. Treasury Secretary Scott Bessent said the biggest operations, the ones covering bonds that mature in 10 to 30 years, go from $2 billion each to at least $4 billion, starting September 9th. Why does that matter? 2 reasons. It takes supply off the market, so there is less of it competing for buyers, and it puts cash back into the system. When money feels looser, the assets people buy with spare cash move first, and that is exactly what happened. But here is the twist. The bond market itself did not celebrate. Long-term bonds fell again, with TLT down 0.35%, and the 10-year yield sat right where it was, just above 4.7%. The medicine was aimed at bonds, and everything except bonds felt better. 3 things actually mattered today. First, Bitcoin, up more than 7%, closing just past $78,000. It broke above its June high near $74,000 and above its 200-day average. That was the ceiling for months. Now it has to become the floor. Second, gold and the metals. Gold rose almost 2% to about $4,660 an ounce. Silver added 1.7%, and gold miners jumped almost 3%. Materials was the strongest sector in the market, up 2.1%. Third, the one most people miss. Utilities down 2.3%, the worst sector on the board, on a day when almost everything else went up. Utilities are where people park money for safe dividends. This was not panic. This was money leaving the quiet corner to chase the loud trade. Now the SignalFinder Pro board, because today it is genuinely useful. The scan featured 57 symbols. Energy, XLE, is still ranked number 1. But look underneath the rank. Its weekly momentum slope turned negative, its daily slope turned negative, and it was one of only 2 sectors that fell today. And it is not the commodity. Crude oil held above $85 on Friday. It is the energy stocks that stopped following. Healthcare, ranked number 2, has positive momentum on the monthly, the weekly, and the daily, and it rose 1.3%. That is the lesson. The ranking tells you where something has been. The state tells you whether it is still behaving that way. Here is the sharpest example. The top ETF was ARKG, up 3.8%, the biggest gainer on the whole board, and the board still marks it watch, not eligible. Across that list, 20 are marked not eligible, and only 9 are set up and waiting. 3 levels for next week. 1, QQQ and its 50-day line, and this one is remarkable. QQQ closed at 713.44. The 50-day line sits at 713.44. It closed exactly on the line. Next week decides which side it takes. 2, Bitcoin at $74,000. That is where the June high and the 200-day average both sit. If this is a real breakout, that old ceiling becomes the floor. Fall back underneath it, and it was just a spike. 3, XLE at $63. Energy closed at $63.64, still above it, but with momentum fading. Lose 63, and that number 1 ranking stops meaning much. And here is what would prove this story wrong. If the 10-year yield breaks above 4.75% and long bonds keep falling, then the buyback news fixed nothing, and the pressure comes right back to bonds and to expensive stocks. You can check the rankings and the signal states yourself inside SignalFinder Pro. This is educational content, not financial advice. Do your own research and manage your risk.